Hi, this is Mark with ValueCharts.com. We are looking at the S&P 500 cash index on a monthly chart, and really there's a lot of things happening here. We definitely had a very noteworthy breakdown from the low of October and the low of September here. We can see right now that in November we are clearly down below those lows. Now, right now this projects really much lower for a number of different reasons. The first thing that I would notice is that if you look at the histogram and the MQ momentum indicator, we see that with the past several surges up in price in the S&P 500, we've had kind of a weakening momentum on the way up. So certainly this first surge is our reference mark, and then we have our next surge, which is weaker if you go down here and look at the histogram, and then this last surge, which takes us to new highs in September and October, ended up being weaker still. So this paints a very negative picture for the stock market near term now, or even longer term. Now the question is can this market muster enough energy to go to new highs yet again? I don't think that's going to happen, especially with the breakdown below the low of the last 2 months. And we also have a minor trend line here that we've broken down below as well. So my gut says that we are heading south here, at least to come down and test this other trend line here, and that would take us down, call it, to the 1250, 1260 level over the next couple of months. Now, longer term, I could make a very easy argument as well that we could go a lot lower than that. I think that after that, the next test, if this trend line's broken, would be the low we saw back in October of 2011, which is right around the 1074 mark, and then below that we would test the low of 1010. So I think that there's a strong possibility that this market could get all the way back down to those levels over the next couple of months. Certainly the economy and the economics out there, the fundamentals are not extremely strong at this point. And with the new administration, for me at least, they're not pro-business. So the Obama administration, in my mind, is going to do potential damage to the stock market. It's not more government regulations never helps anything, and the small business sector right now is hurting. So, for the fundamental reasons that I've seen out there, and that's just more or less kind of an observation of subjective opinion there. Numerous economic reports as well, but mainly what we focus on here are the technicals, and this paints a picture that things could go a lot lower. Now, looking at the MQ cycle finder as well, we saw a bearish divergence here as a lower cycle value was registered with the highs of September and October as well. So I'm looking at the very minimum of a retest of the low that was on in June, which would take us down to the 1260 level. And then I believe that's going to coincide with this other trend line. If we end up breaking that, then I would say there's a strong likelihood that we could definitely visit the 1000 level in the S&P 500, and if we break that, then we could quite possibly visit the lows of a couple of years ago back in 2009, March of 2009. So not to be a spoil sport here and be overly bearish, but right now I'm definitely trading this market from the bearish standpoint. I sold a 5-lot a day or two ago, I guess it was yesterday, at 13.95 3/4 in the futures market, and I've got a nice profit built up there. I'm going to continue to ride that trade as long as I can. I've got a break-even stop in now, and so I'm really, as long as the market doesn't pop back up there and run me out, I should be in pretty good shape there. So we'll continue to watch this market, but as right now, for the time being, I'm definitely very bearish this market, and I think the next stop right now is going to be right around the 1260 level, and then we'll follow up and continue to watch this market. But any type of moderately overvalued or significantly overvalued price points basis, these 60-minute or 120-minute price bars would be definitely areas that we could conceivably look to add to our short position. That's all we have for this video, and we're going to talk about how to strategically enter this short position in upcoming videos and continue to watch this market. Thanks for watching.